So let me just start recording this. We're recording this meeting. So we were going to record this meeting and we'll actually share it out in case you guys have any other questions or want to rewatch it. It's so excited. If you're running out of things on Netflix to watch. So anyway, today we have Bill Thomas. Bill Thomas is our operations manager and I guess senior title officer for the company. Is that, I don't know, all your titles.
You have my title all wrong. I mean,
I get it all wrong because you have so many titles. It's hard to it's hard to say. So Bill's been with our company for 20 years now. I think he's from the first employee with California Title in Los Angeles. I've been working with Bill for almost 20 years now as well. So Bill is one of the reasons what really helps and separates us between other title companies. What we're able to do is I'm able to call Bill directly. I have his cell phone number, his home number. So on weekends, if you guys have title issues, Bill is the decision maker on how to get things done and how to make these your deals get closed. So we were on talking to some other agents recently, and they're saying some of these other title companies are so swamped with refinances and stuff, they can't get a hold of anyone. That's not the case at California Title Company. We're able to get a hold of Bill Thomas right away. We're able to get a hold of Dave Erb, our president, right away, and get your guys' deals done because that's what it's about, right? So Bill is going to talk to you today about solar panels as well as the HERO programs and how it affects title insurance. So I'll let Bill go from there. And Bill, if you want to introduce yourself again, Bill, go right ahead with your correct title. I don't know.
Yeah, I'll give the right titles, but it changed over the years so many times. That's why you get them all mixed. I get it.
Yeah.
Well, thanks for joining us this afternoon during your lunch hour. My name's Bill Thomas. I've been with California Title Company for 19 and a half years, almost going on 20. In February, it'll be 20 years. I've been in the industry for 32 years, going on 33 years. Started in 1988. I'm the vice president, LA manager, and the advisory title officer for California Title Company. And we wanted to talk a little bit about solar panels and the HERO program and how it impacts us in our title world, our real estate world. It's kind of come up a few times where it's just not understood on how solar panels are really handled through our real estate world. So I wanted to just go over that a little bit. And, you know, as we all know, solar panels are a great resource now. I mean, it's helping us with energy resources, you know, our bills resources. I mean, it brings down your energy prices. In fact, as of 2020, California legislatures have created a bill that actually mandates that any new built home has to have some solar panel source on their property. So we've gone through that avenue, and it's going to be the wave of the future, and it's here to stay. In addition, there's a program called the HERO PACE program that actually just recently was discontinued here in Los Angeles County. And I'll touch on it a little bit because it is still out there on pre-existing transactions or pre-existing agreements that have already happened throughout our industry. And that's a little bit different. It includes solar panels, but it also includes an array of other energy efficient programs such as landscaping, pool equipment, energy efficient pool equipment, also energy efficient windows or appliances. All that stuff can be added into the HERO PACE program, and we'll talk about that, how difficult that is because of how it's actually paid back by the homeowner. And the reason it got discontinued is because it was believed and being sold to the homeowner that there is not a need to pay it back. It's free. That's not true. It gets charged in your taxes, and you have to pay it back through your taxes, and that's where it becomes a problem. And what was happening is the taxes became so large, almost like a Melrose type thing, that some of the homeowners could not afford it, and they lost their property. So LA County decided we're going to discontinue that program in here in California for right now because it just hasn't been sold right. It hasn't been disclosed right to the homeowners. So they'll revisit that eventually down the line and see how that works. I don't know if any other counties will go that route, but right now LA County has decided to discontinue that program. But in any event, Brett, I can share my
Yep.
screen.
You go right ahead. I'll let you,
Okay.
that way you can control it.
All right, so I'll go ahead and see if it allows me to. No, it won't let me do it.
It won't let you do it? Okay, then I'll do it.
You're gonna do it?
I'll do it right now, yeah.
All right.
One second here.
So we touched on the solar panels, how this is the way of our world now, and they're going to be in our lives in real estate, and there's two different ways of having solar panels. It's either a lease or purchase. The most common one right now is a lease, and what actually happens is the homeowner leases the solar equipment from a solar company such as Solar City, Sunrun, that kind of thing. So what that does is then the solar company puts on a contract. It's the energy producing contract that basically allows the homeowner to produce energy through solar system, and the company then sends that energy back to the public utility company handling the electricity, like here in Southern California. It could be a Department of Water and Power, Southern California Edison, that kind of entity. And what then happens is that public utility company then converts it back into electricity and sends it back to the homeowner. What's neat about that is if you don't use more than your allotted amount that you're paying for through your solar contract, is you get money back from the public utility company at the end of the year. If you happen to use a little bit more, then you end up paying it back to the allotment that goes over back to the public utility company. So like I, for instance, have one, and we're always over the amount. I think it's my pool, and I need to get an energy efficient equipment for that. But I think usually by the end of the year, we pay back about $120 to the public utility company. But we have a savings of half the dollars that we were paying during summer throughout the last decade or so. So that's what's neat about the solar equipment. You can go on to the next screen, Brett. So we just talked about it. So when we lease, what has happened is the solar company is going to record a notice of an independent solar energy producer contract. And this is the document that puts everybody on notice that they got a lease with solar panels, and they're using that energy resource to send back to the public utility company, and then the public utility company is sending it back through the solar company, the energy for the home. So basically now what is being leased is only the equipment. So this is where everybody seems to have a misunderstanding and misrepresentation as to what solar panels are. So the solar equipment, even if you buy it, is really only attached as a personal property theoretically. So what happens a lot though is the lenders don't understand that it doesn't attach to the property. So they have this ideology that if they can subordinate the lease to their mortgage, they have priority over that lease. Well, they do and they don't, because theoretically it doesn't attach to the property. And if the solar company forecloses on the actual lease, all they do is they can come back and take the solar equipment if they want to, because it's separate from the property. So that's where it gets a little difficult on how we handle in our transactions. I'll get a little bit more detailed on that as we go along. We go to the next page, Brett. So purchase is kind of the same thing. What happens though is there's no solar contract agreement between the solar company and the homeowner. So the homeowner bought the equipment and they had it affixed to their property. And what they've done now is they cut out the middleman. So now you as a homeowner now have the agreement with the public utility company to send them solar energy, and then in turn, somebody like Southern California Edison sends back the energy as an electricity form back to you as a homeowner. So you cut out the middleman, you cut out Solar City, you cut out Sunrun, A lot of the times, though, these purchases are personally financed, so kind of like a credit card. It's just it's not financed with a loan or any that gets attached to the property. You basically go on your credit, and if it's $40,000, you're going to pay that bill like a credit card every month to the solar company. And what they'll do, and in the case of a lease, they'll record a financing statement in the form of a UCC1. And that's where it gets complicated, is how we handle it as well as we go down the line. But if we would go to the next screen, Brett.
Okay.
So when you're buying or selling a home with solar, a lot of times you hear people talking about the ability for people to assume the lease for the solar panel or the purchase of the solar panel. Now, it can be done. And a lot of times how we handle it is different ways we handle it, where the actual lease gets or the solar independent contract gets released.
I actually, when I was putting it in, I couldn't
someone ask
find
you a
it
question?
there.
No, I
Your
think someone's just talking
was
to me
not
about it.
show up, and I call them a.
I found her.
Okay.
Go ahead.
All right. So anyway, so what happens is the solar panels, solar contract agreement has to get released. The UCC financing has to get released, and then basically the buyer has to get approved by the solar company, whereas they can assume the new contract. They'll create a whole new contract based on the balance of what's owed on the lease and or if it was purchased on whatever's owed on the financing, then they'll create a whole new contract, whole new agreement, and that stuff gets recorded after we close. And that's where it gets a little complicated as we go along. But let's go to that next screen that you're going to, Brad. So how do we handle it? So what does title insurance do in this case? So we need to make sure first that the lender will allow the borrower to assume the lease. If they are going to go ahead and continue on with the lease in the transaction. If not, or if so, if they're going to create a whole new contract, we need to release the notice of independent solar energy producer contract. We need the financing statement, which is the UCC1, to be released. Then a new contract has to be worked out between the solar company and the buyer, and then it has to get recorded after the fact. Now, sometimes what happens in instances that the solar company and the buyer say, hey, we don't want to re-record everything, we want to just go on forward. So what we can do is we can issue an endorsement to the buyer's lender, and the buyer just takes subject to the existing solar contract. The only thing with that, though, is the UCC financing has to be terminated because it's with the old owner, and it has to be re-recorded with the new owner after a close of our escrow. But we can issue an endorsement to the lender, basically giving them their priority over their mortgage position. But in that endorsement, it explains, though, that they don't actually have priority over the actual solar equipment. It's just separate because it's personally owned, as opposed to being owned on the fee title or the property. And that's where some lenders get confused. They want a subordination agreement. We can't work with a subordination agreement. We either have to do this endorsement or they have to release all the documents. Now, the endorsement is kind of new. We put it in effect in March of 2020. And it has been successful for all the lenders to accept that and understanding it. So it's been a really successful program that we put together in the title industry, and it helps everybody get their solar companies or solar transactions closed, or I should say properties where there's some solar panels and their transaction closed, because we have had many times where properties have been held up because we're waiting for the release. We're waiting for the new solar contract to get recorded. So this endorsement has really been helpful and successful in getting transactions closed faster. So we want to go to the next one, Brett. We'll talk a little bit, I think, about the PACE Hero program. So I kind of touched on it just before we started the recording of the meeting on it. And the HERO program is the home energy renovation opportunity that's designed here locally in California. I think actually all of Southern California calls it HERO program. But it's under the PACE program, which is the state of California's bill, Property Assessed Clean Energy Bill. Basically, what it allows you to do is not only have solar panels, it talks about having energy efficient appliances, energy efficient windows, energy efficient landscaping, energy efficient pool equipment. All that can be added into this HERO program. And what happens is a personal private lender lends money to the homeowner to do this work by a contractor, and then it gets paid back through the tax bill. And that's where it gets kind of complicated. You want to go on to the next slide, Brett?
Sure.
So I talked about all the things that the HERO program can be a part of, or things that can fall under the HERO program, where they can actually have all these energy saving products added, renovated for their home. And as I was saying, so the actual financing gets included into the property taxes yearly, and it could run for 20 years like a Melrose. So the dilemma here is you could be paying $7,000 yearly in taxes, and then all of a sudden it doubles because of maybe the size of the scope of what the person did on the work. And I talked about it earlier just before we started the meeting, that the LA County has actually discontinued the HERO program, and because it's being sold improperly or disclosed to buyers improperly, they think it's free and you don't have to pay it back. But it does have to be paid back, but it gets paid back through your taxes. And this is where it gets complicated. You want to go to the next screen, Brett? So what happens is, where are we at here? Okay, we'll stay there. So what happens is when it's part of the taxes, the lender, the buyer's lender, and the buyer should be aware of this because they're going to assume those taxes, and it's going to be the yearly payment for however long. Like I said, usually they run 20 years. But the buyer's lender, it complicates things because, as you know, taxes are a priority. And if the HERO program defaults, the taxes default. So now all of a sudden, the lender is going to get foreclosed upon by the taxes. So when a lender sees the HERO program on a preliminary report, what they expect is us to actually cure that program. So it has to be paid through the close of our escrow, and including the taxes, and it may have to be the whole entire year of the taxes, even if we're only in the first part of the year. So say we're closing in October and we only have to pay the first half taxes according to the lender. We also have to pay the second half taxes because the bill was already billed with the PACE HERO program, and we have to assure the lender that second half taxes aren't going to impact their loan policy. So that whole entire year's bill has to get paid, and then that's the way we get it released. Maybe we can go to the next screen, Brett.
I think that's it, Bill. Well,
that was it? Okay.
And to add on top of that, so Bill and I were working on a deal, I think it was last summer or so, that we had this exact same thing, that all of a sudden the seller had to come up with, I think it was like $27,000 because of the way the taxes were. So it can be sticky, and that one almost killed the whole deal because they didn't have it. So it was an interesting scenario. It did get rectified, but because of the timing, the seller had a $27,000 bill, I believe it was, or something like that.
You got to be really careful when the PACE HERO program shows up in a report, because if you're in the midst of a tax year, there has to be an understanding that the lender's possibly going to want, more than likely going to want that to be paid in full. And the only way you can pay that PACE HERO program in full is by paying the whole entire year's taxes plus the demand that we receive from the financer. There's a financer out there that's very common with the PACE HERO program called Y Green. So a lot of times you'll see that come through your transaction as a demand holder for any of the PACE HERO program financings. But very soon, I mean, there's a lot of properties out there that are part of this program, and they still exist. But very soon, that program is going to be gone because the state of California. I'm sorry, not the state of California. The LA County has discontinued that program. So, because like I said, it's been misled to the homeowners that they don't have to pay it back, but yet it does because it's really part of the taxes to pay back. So it's very interesting how they sold it in California, and LA was not happy about that.
So Bill, I'm going to guide a couple questions here. So
Sure.
Can a solar lease be transferred to a new buyer?
Oh, absolutely. Yes. Of course, the buyer has to be able to qualify for it. As far as credit-wise, their FICO score has to be a certain level for it. But yes, it can. And then they would assume it, and they would go through the process either of releasing that solar contract agreement and a UCC1 and creating a whole new one to record after the fact, or they just release the financing statement and we would go ahead and show the solar contract and endorse it with the new endorsement that we have that just came up in 2020. The other thing to keep in mind with that though, Brett, is that some of the lenders kind of tag that as part as being another payment for them. Right. And it may harm their credit worthiness. Yeah.
Their debt to income ratio. Yeah.
Right.
Exactly. Now another question is, who's the one that reaches out to the solar company to transfer that lease? Is it escrow? Is it title? Is it buyer? Is it seller? Typically.
Well, usually the homeowner will contact the solar company to instigate that, and the escrow company will then go ahead and follow through with it, work with the solar company to get all the paperwork, all the documents necessary to do that. But the owner of the home that has the solar contract needs to reach out to the homeowner first and letting them know that they're selling the property and they're going to assign it over to the buyer. Sometimes some of those solar contract agreements do actually have a caveat that if they're selling the property, they have to actually pay off the solar agreement, the solar lease.
Yeah, and if you guys have that, I'm just sort of leading some questions here. So I do know the answer to these questions. I'm just leading some questions to Bill. If you guys see a solar thing on it, you can reach out to me. I'll find out who the solar company is. Relatively easy. I just did one recently in one of my offices and sent over the form on how do you transfer it over. It's pretty easy stuff. I just did a quick Google search and was able to figure out how to get it all transferred over. So if you have that, let us know. Bill, another question on the PACE program. Could the new buyer assume that, or is it transferable, or does that have to be paid full at the end of the close of escrow?
Well, I mean, the new buyer can if the program again has the ability to have that in the contract, and usually they do. I would say about 99% of them do.
Yeah.
But the caveat to that is that if they have a lender, the lender may not want that because of the fact that theoretically that regardless of what they do with that actual agreement, if they subordinate it or release it, whatever, and then put it back on, it's still going to be in the taxes and they will have super priority over a loan. And so most lenders will want that to be paid off before they actually will lend on the property.
Yeah, we had one not too long ago, and I don't remember it, Bill, it's a couple years ago, but it was in the Calabasas property, and there was a $200,000 HERO HERO loan on it, and it really came close to killing the deal because there wasn't that much equity in the property. They couldn't transfer it, so it did work out, but it was very tight. So some of these things are big. They're $200,000 worth of work, which was pretty amazing. So
Jocelyn has a question.
Yeah, Jocelyn.
Yeah, will the seller have to pay 1 year of those taxes or the whole amount of the solar?
Well, it depends on how it gets prorated and what part of the year it is. So if it's in the midst of it and they would pay, right in the middle, they would pay the whole entire first half taxes, and then they would have to prorate the second half taxes. But it depends on how it's agreed upon between buyer and seller too, because that's kind of complicated because the buyer might say, hey, you got to pay off the whole entire solar agreement for me to buy this house. So the only way you can do that is by paying off the taxes for that year plus the solar demand. And that may have to be broken down to just a regular installment to the buyer, and then the actual solar portion that's being assessed to the property taxes to be paid by the seller. So that's how complicated that gets.
Yeah, it's not easy. I mean, we get through these things, Bill. I don't see it. We never like lose a deal or not ever close, but it is something to be mindful of, and that's why we're doing this class. Anyone else have any other questions that might? Judy Bernstein.
Hi. Just a quick question. Thank you. This has been very helpful. Is there a possibility, Brett, that you could put together some type of a little flowchart template that would jar our memory of who to contact, lender to this, or if-then scenario, so that we know when to contact escrow and what to get up front when we do our listing agreement?
So like a timing of, if you see a solar, here's what to do.
Yeah, right.
Yeah, I'm sure we can put something together like that.
There are a few steps and a few parties involved, and I wouldn't want to miss any of them.
Yes. Okay. I'm sure we could probably put something together like that.
Absolutely.
And also in the presentation, or if you're with a buyer, you would want to be able to explain that. So some little guideline would help.
So you want your little cliff notes, Judy? I see.
Yes, I do.
Okay. Okay. I'm sure we could put something together like that. Wouldn't be too difficult. Jenny, you have a question?
Joni.
Hi.
Sorry.
I don't know if you guys know the answer to this, maybe some of the agents do from experience, but if a homeowner pays cash up front for solar panels and then decides to sell the house just a few years later, do you think that the seller will get the value back in the sale price? Like you might see in a kitchen or a bathroom, or usually not, people don't care.
Yeah, it depends on how long they've been there for. I mean, the value, obviously, like, Bill mentions, he has it. So he's probably already gotten his value. He's had it for a decade now. So he's already gotten his money worth out of it, it sounds like. If he just did it a year ago and sells, obviously he's not getting the money out. So I think it's a calculation on how long you've been there for, against what your savings are.
I have seen, Jenny, just to add a little bit to add to that, what Brett's saying is I have seen homeowners put that in as part of their sales price because it does have added value to it. A lot of buyers, though, kind of like say, well, just because they have solar panels, how does that add value? But it really does, because it does bring down your energy bill, your electricity bill. But yeah, I have seen it happen. I don't know how successful it's been. But I have seen it out there.
Yeah. Yeah, it's all the same. I mean, it's always one of those things where I think it's timing. If you got money out of your pool or not, I don't know. But yeah, there's probably some value built into it for certain buyers, without a doubt. Joni, do you have a question? You said?
Yeah, I just was curious. Do you think it's better for a homeowner to lease or to buy? Which is better in the long run?
Well, I can tell you my personal experience. It's kind of half a dozen one and six of another. Honestly, I probably would have bought it if I would have known how it works out in essence. But I'm being told that eventually when my lease ends, I can acquire it myself. But that's at the next decade I got going on. But the reasoning I kind of do like the lease is the factor that it's for the whole 20 years, I have a guarantee on it, a warranty on it. So if anything goes wrong with the solar equipment, they come out and they fix the solar equipment without any cost to me. Where when you purchase it, you only get a 10-year warranty. So then you either have to re-up the warranty or you have to find somebody who can do this thing. So, fix them and such forth. And the thing about it is, when I first leased it, I thought, okay, in about 10 years, there's going to be a lot of people that are going to be working on solar panels, and there'll be private companies out there that can fix them and such forth. And I haven't seen that actually happen yet. Maybe it will in the next 10 years. So that's the only reason I say about a lease. I couldn't. It's your personal preference. I mean, once you buy it, it's yours, which is the greatest thing. You don't have anybody in between. It's just between you and the public utility company. But then, when you buy it, and your warranty, ends, and if you don't re-up the warranty with the solar company, who do you find to fix any problems with it? That's my only concern with the purchase. But, you know, with purchase, it's yours, and then it's all, you know, money for you. Basically, you're saving everything. It's not going to the solar company. It's all yours, and you're dealing directly with the public utility company.
Yeah. Well, Jody,
And
it's
on
also,
selling the home, does it really make a difference in the sell, whether it's a leased or owned by the homeowner?
It does for title insurance in essence, because it's easier to manage the recordable docs that are of public record. I think, you know, basically a lot of times when you purchase the solar company, the only thing is if you privately finance it, you know, like instead of buying it outright, maybe you're financing about $40,000 of it, they still will record a UCC1 on the record, so that has to get released. But if you bought it out 100%, it's all paid all up front. There's no liens to deal with, no solar contracts to deal with, so then it's just straight, just straight goes forward. Yeah.
you know, but Jody, the price points that you guys all work in, and then in primary California Title works in, is, you know, I think the average sales price is $1 million plus is what we're pretty much all averaging, at least in Southern California right now. It feels like I've never seen an issue where a buyer that could buy $1 million house has any problems qualifying for that lease. So it seems like sort of it's a no-brainer. I mean, I'm empty nesting right now. Just as of about a month ago, my youngest just moved out. So we've always been talking about, oh, when our kids go away, we're going to downsize and, you know, go to a smaller place with less electricity and stuff. And every single time we get our DW appeal bill, my wife always goes, I told you we should do this. So that's why I've been reluctant about getting solars, because if I bought it outright, what if I'm only here for a couple more years? You know, if I lease it, it's probably easier for me to swallow the bullet and just sell if I have a lease than if I actually purchased it. If I'm going to be here for another 30 years, 25 years, makes sense to buy. But if I'm not 100% sure, I think that's the decision makers. If you might be leaving, lease it, I guess. That's at least my view.
That makes sense.
And I have a question on that. If somebody leases it and the new buyers don't want it, the solar company can come and remove it. Is that correct?
That is what my understanding is, because it is, yes, the answer is yes. They can remove it or they'll just leave it there, one of the two. But yes, if it defaults or whatever, it becomes back the solar company's equipment, and they could come and remove it. And that's the only thing that goes away.
There's probably some fee on that, though.
I'm going to put in my 2 cents, if I may.
Absolutely.
Yes, of course.
I may put in my 2 cents here. Yeah,
Go
you
ahead.
got to be really careful if you have some.
Hello?
Not a hero or a pay. It's a flat lease. Hopefully you can hear me.
Yeah.
Now we can
Because
hear it.
a lot of these solar companies are really difficult. Can you hear me now?
Yes, now we can hear you. Yes.
Can you hear me now?
Yes.
Yes.
Okay, I'll tell you that you need to look at that lease that's existing and really read it, because some of these are really heavily swayed to the solar company. And if the buyer does not want the system, the solar company may demand that the entire amount is paid out of escrow or prior to by the seller.
Right. I've seen that before
correct.
as well.
You know, you really have to be careful out there, because some of these companies are really difficult to work with.
Yeah, I've seen that. You know, luckily in this market right now, where we're seeing multiple offers, I think the problem is if buyer A doesn't want solar, you have buyer C, D, E, F, and G that will willing to take the solar to get the property. So that's going on right now. You know, in a couple of years when it's a buyer's market more, you're right, that is more of a concern for sure.
Well, I had a question, Brett. Jen Brookley here.
Yeah.
So is there any way then, other than either defaulting or trying to get the seller by the lease, for the lease to be absolved as opposed to being absorbed by the buyer?
Well, I mean, I think in the contracts, like, you know, Annette was just trying to reference, is that there probably is ways, but there's going to be some penalties. There's going to be some, you know, construction work to be able to get it off there. So, or it might be a paid in full on the transfer of your title. So it just all depends on the contract. You know, certain ones I think are probably pretty easy, but other companies maybe not as easy. It's going to be a case by case.
Right. Well, I'm in an escrow with clients, and we got a solar lease from one company, initially from the seller, and then there was a UCC on title from a completely different company for a longer term lease with no buyout options. So it turns out apparently the seller had no idea who he had a lease with.
Huh.
And and title requested us to prove that the other contract was not valid, obviously, and it wasn't. But now my buyers are stuck with a 25-year lease that just started with no buyout option.
Yeah. Huh. Yeah, I mean, so that means
So, I mean, is there any...
The seller got into a junky
Yeah.
lease. So that's why, a net reference, you got to make sure
Right.
you read these things pretty clearly, because there is people that are going to take advantage. There's predatory solar companies out there, basically. So, there's certain deals are better than others, and it sounds like they got a bad deal.
So really what I would have to advise my clients is that they're going to either have to default or try and find a loophole if they want to get out of it and still want to buy the house, I should say.
Yeah. If they still want to do it, that's I think the best advice.
Okay. Thank you.
Yeah. Sorry.
Yeah.
Wish you were more helpful with that. I know it's a sticky situation.
Well, it is what it is.
Yeah.
Contracts.
Yeah, just real interesting on the contract that I have for the lease. So it's not much said other than the fact that if we default, they can, enforce a judgment upon us and then come back and take their equipment. We have to return their equipment, but what they mean by that is they want to come and take the equipment. Of course, they don't tell you much after that how they remedy it. Obviously, they want to, file a lawsuit against you for the balance of the funds, in essence. So you gotta be careful of that. It's like any other kind of lease. So you lease a car, you gotta pay back the leaser to want to, sue you for it. I mean, you return the car and such forth, and that kind of thing. So you just keep that in mind when you do enter into the lease with that.
Yeah. So our time is running out a little bit. We're almost at 45 minutes. So Bill, what do you think percentages? I know it's a weird question. Have solar leases on our transactions? It's like I only see like 3-4% of that. That's pretty small.
Yeah, I would think you're about right. I mean, about 3 or 4%. It's starting to become a little more common, but you're right. It's about 3-4% at this point. It's not that. We're still not there. California is trying to get there, but we're still not there where the majority of homes have that. And it will eventually.
And that being said, 3 or 4%, I know that sounds small, but you'd be surprised at how many times we're dealing with these things. And that's why we're doing this class. So we're probably going to wrap up now because I don't want it to shut up on me. If you guys have any suggestions on future classes you want to see Bill and I teach or do, please just shoot me a text or an email. And we hope you enjoyed today's class. We're going to put more of these things on. Yes, Jocelyn.
Yeah. I happen to be looking into